Okie dokie. Hello, hello. I got two people watching. Yay. I know I have scheduled this for 1 o'clock. Pardon the delay, a couple minutes late. My name is Tim Trevathan, Keller Williams agent here in Metro Atlanta. I know some of you have followed my YouTube channel for a while, others have seen my monthly newsletters come out. And I'm going to provide basically some more information, more in depth as far as buyers and sellers that I've been working with here in this market in Atlanta. Some of you may be wondering if you already live here, what it's like to buy or sell, or especially those that are in other states, other cities. You may want to know, is now a good time to buy? If you're looking to sell, should I sell my home now? Have I missed the wave, so to speak? Well, I'm going to help answer some of those questions. And first, I'm going to just start off with what the National Association of Realtors have said about the current data that just came out last month. It's always, 1 month back that they look at all the information and analyze it. So this is what I'm just going to read to you real quick. Pending home sales decline for the second consecutive month in July, and for the 8th time in the last 9 months, according to the National Association of Realtors. 3 out of 4 major regions registered month-over-month decreases though the West notched a minor gain. Year over year, all 4 regions saw double-digit percentage slides, the largest of which occurred in the West. So, if you have questions, please feel free to utilize the chat that is on the right side with any questions that you have along the way. You can ask anytime, I'll help answer. Hey, Brandon, thank you for joining. Under contract in Southwest Atlanta. Well, great. Congratulations. I'm happy that you were able to find a home and that you went under contract. I know there's been a lot of talk about currently, Tim, is there a housing recession? Are we going into a crash? Well, there's a long answer and short answer to that. So I'm just going to start by saying the short answer is no, I don't think we're going to have a crash. We're going to have kind of a housing correction. Yes, we are. And in fact, we're having that right now. Some mark it as a housing recession. I'm just going to read one other thing that one of the economists that I follow, he wrote this in his blog. He says, home sales plunged again in July, falling 5.9% month on month. It was the 6th straight month of monthly declines. Year on year, home sales have plunged 20%, according to the National Association of Realtors. We are now in a housing recession, quote unquote. The seasonally adjusted annual rate of sales in July came in just a hair above the June 2020 rate in the middle of the COVID lockdowns. Beyond the lockdown months of April to June of 2020, it was the lowest sales rate since 2014. So this guy's kind of a doom and gloom, but he does provide a lot of facts. And one of the things that he hit on is that even when when sales were down, as they should have been, we're now seeing sales down at the lowest rate since 2014, even as low as the COVID era. So what's causing this? I'm just going to briefly talk about that. I think it's like not really a hidden secret out there anymore. We obviously can see that mortgage rates have come up, and a lot of it has to do with the Fed raising the base rate to affect rates for all of the economy that are trying to help fight inflation. It's almost a double-edged sword because in one sense, you're wanting to help inflation, but at the same time, to do that, you have to raise the rate, which hurts the consumer in trying to spend and use purchasing power to buy products such as cars or goods or services, or in this case, what this video is for, houses. Now, one of the questions that I've received from a lot of people is, Tim, is now a good time to buy? Well, I know that in the last year and a half, we have seen a very hot market. It was 24% increase in sales in the year 2021 last year. At the beginning of this year, it started to skyrocket and take off just like it did in 2021 with an 8% increase in sales. So that is 32% in the last year and a quarter. And that, quite frankly, is unsustainable. And I think that because of that, when the interest rate started to rise, the market shifted very quickly because of that. I remember in January, I had a listing. I work in the Gwinnett market, 25 minutes northeast of Metro Atlanta, downtown Atlanta. And I had a listing in Decula in January. We had 20 offers. In March, I had a listing in Swanee. We had 7 offers. A listing in April had 4 offers. That was in Swanee as well. Then I had one in Buford in June, and we had only 1 offer. We went under contract. Buyer got cold feet. They terminated the contract. We're still sitting on the market. We've had 4 price decreases. So that paints a good real life picture right there of how there are less offers than before. The offers that were coming in back in May and June and July, even though they were few and far between, the offers that did come in were still pretty strong. So that was the thing that I was happy to see. Now we're in the month of August, and I will say that we're seeing still a shifting market and a lot of delayed information that's coming out on a day-to-day, weekly basis. And that is that now homes are sitting on the market longer, and we are receiving more price reductions. One of the things, though, to answer the question about should buyers buy, it really all depends on your financial situation, your family situation, and your goals. When I bought a house myself, so I'm 35 years old, bought a house back in 2018. I was a realtor at the time still, way back. And when I was buying my own house, met with a lady who wanted to sell her house. And instead of listing it, I told her, hey, you don't need to find a buyer because you've already got one. She's like, ooh, me. And so I told her, I will buy your house because I'm in the market to buy. And I told her there's 3 reasons why I wanted to buy. Number 1, I was financially ready. Number 2, I found the house that I like. Number 3, mentally and emotionally, I was ready to buy because that was the stage in my life that I thought was the best thing for me to do. And I knew what it meant to be a homeowner, the value in being a homeowner. I would say the same for you right now in any market, doesn't matter. In an inclining market or declining market, if you can have those 3 resolves within you, within your heart, go ahead and buy. Now, the home prices are at an all-time high. I get it. Interest rates have climbed a lot. Historically, they're not at the highest. The highest was 18%. Right now, we're sitting at about 5.5%. Having said that, it's a very interest rate sensitive market. I know back in 2018, when I bought, this is how I remember because I bought during this market, the interest rates, some people forget, were actually at 5.1% in the summer of 2018. And so during that, I'd say 3 or 4 month period, because it did come back down, I did see a shift at that time. I had a lot of buyers I was working with, and all of a sudden they just disappeared. And that was at 5.1% at the home price values of 2018. Now consider now with a little bit higher at 5.5, 5.6% interest rate with home values that are double that of 2018. It goes without saying that no wonder we're seeing a shift in the market. Now, you could sit on the sideline, as I do have some buyers doing that, and say, Tim, I'm going to wait until prices come down further, and then I'm going to re-enter the market and buy. That is one feasible solution and route that you can take. Others have said, Tim, I think that the home values have already come down some, and I'm seeing that there are some concessions that sellers are willing to give. We've got the finances and we need to buy. So we're going to go ahead and continue looking and actually purchase a house here in the next 3 months. So I've got those 2 types of buyers going on right now. And one thing I will say is that, the buyers that are financially ready, some of them, they've been looking for like 2 years. They've either been priced out of the market because of the competition, not necessarily the rate. Now they have more money saved up for a down payment, so it's a different story. Or you've got people that they have been on the sidelines even during the hot market, and now they're ready to finally get into the market because they said, Tim, we were not willing to do over asking price of $50,000, competing against 27 offers, waiving our financing and appraisal contingencies, and trying to give up our due diligence period, so waiving inspection. So what if there's something wrong with the property? I sold a property back in February of this year. It was a property in Swanee. priced at 350. We had 10 offers, sold for 370, and that person waived their due diligence. As I represent the seller, I'm trying to get them the best offer and help them navigate that process of choosing the right offer. So we chose the one that had no due diligence. If I work the buyer side, I want my buyers to have due diligence, but I get it that back then they wanted to be able to get a good deal. Well, as well, the sellers want to get a good deal. The buyers, they were not. But what I'm trying to say is that the buyer they ended up buying, come to find out that when he bought the house, later the agent told me, Tim, their basement flooded. And we realized there was a crack where water intrusion was coming out of. And I told them, I know we're already past closing and you guys have an inspection. And I know that it did come up with a crack, but because we waived due diligence, my seller is not willing to do anything. I'm sorry. And that was very hard to do. I felt bad for that buyer, even though I was representing the seller side. Well, guess what, guys? If you're looking to buy now, yes, even though the interest rates are now higher, again, if you're financially sound and ready and you find the house that you like, it may be a good time. Why? I've now seen in the last 2 months, buyers getting their offers accepted under the asking price. I've now seen buyers get credit towards closing costs from sellers, not just from the inspection period, but even on the initial offer. And third, what I've seen a difference in the last 2 months here is that there are sales contingencies being accepted. So in other words, what is a sales contingency? Well, a lot of buyers, because of their income, their credit score, there's a certain amount that they're pre-approved for to get a home loan. And quite frankly, some of them can't get pre-approved for higher unless if they sell their current house because they have debt that they need to get rid of from selling that house and then use the equity to go towards their down payment to make a bigger down payment so they can qualify for more. Well, a lot of times in the past year and a half, if you had a sales contingency, meaning you had to sell your house first in order to qualify for a bigger loan to buy another house, sellers wouldn't accept it. Why? Because they say, Tim, I know your offer for your buyer is very solid, but unfortunately, I have a sales contingency, and we have 5 other offers on the table that have very similar offer price, but no sales contingency. Well, guess what, guys? In the last month, I had my first sales contingency accepted. In the last 2 years. So what did that look like? It was a property priced at $850,000 in Decula, and it was a very beautiful home, incredibly renovated. It was a 1996 home, but it was completely renovated, full finished basement, 5-bedroom, 4-bathroom house, nice big backyard, very nicely landscaped, 4-sided brick, two kitchens, one on the main level and one on the lower level, the terrace. And we put in an offer for $10,000 less. On top of that, asked for $15,000 closing costs and told them we have a sales contingency. We did give them a kick-out clause, but we said we need to do a sales contingency, and they accepted it. And so that might lead you to ask, well, what is a kick-out clause? I just mentioned that. Well, you can do a sales contingency, but at the same time, depending on what the seller prefers, they may allow you to have one, they may not. So what a kick-out clause means is that you are under contract, but if another offer comes in that the seller likes that doesn't have a sales contingency, the seller has the legal right to be able to choose that offer and thereby kicking your offer out. So now you're no longer under contract, but the seller's now under contract with that other offer. You will, however, get an opportunity, sometimes 24 hours or 48 hours, to be able to make a decision to say, all right, we'll come up with higher earnest money, or we'll waive our financing and appraisal contingencies, or we'll come up on the sales price to match the other one, or 5,000 over, something like that. Once that agreement's made, you can still stay under contract. Otherwise, that kick-out clause, it's still a risk. But overall, it's a lot better than it was in the last year and a half. So again, going back, if you're a buyer, think about those things. If you're to ask me, Tim, has the market completely declined? Are we bottomed out, so to speak? It's hard to say. I know the interest rate was forecasted back in January of this year to be 3.7% by the third quarter. Well, we're sitting in the third quarter right now, and it's 5.5%. Completely missed the estimation forecast altogether. So I can't sit here and say I've got a crystal ball and know what the future holds, but I will say that I think we're going to keep seeing price decreases. Yes. And I think a lot of the data, whenever I work the seller side and I recommend to the seller what price you should list your home for, I would always go back and look at the last 6 months of comps. Comps meaning comparable homes that were sold either in that neighborhood or a 1 to 2 mile radius. And that's how I would determine pricing, along with other things such as if they did any renovations or not. Well, now the market is changing so fast. I now have to look at the last 30 days, and in some cases, the last 2 weeks at what has sold or gone under contract. If a property is gone under contract, but there are no sold comps that I could rely on, then that's the only one I have to rely on is the under contract one. I'll call the agent. I'll say, hey, look, I know your home hasn't sold yet, but if you could just help me out in any way, as you know, as agents, we're trying to help each other out in this business. Do you mind sharing with me, what's your sold price, what it's going to sell for? Sometimes they end up giving me that information. And when I find out, then I know, okay, well, the last comp that sold 3 months ago in this neighborhood, let's say, for example, in Duluth, and I'm selling a 3-bedroom home. There's another 3-bedroom home that sold 3 months ago for, $350,000. And my seller's home has all the same features. So logically, we could list it higher for 360 or 355. Logically, we go up in price more than the last one that sold 3 months ago. Well, then if I call another agent with a house that's under contract in the same neighborhood, set to close in a week from now, I don't know what it sold for. What if that property sold for 345? Well, we now see that it's in a downtrending market. So should I be listing my seller's home at 355 because of the comp that sold for 353 months ago? No. Now I have to look at what's currently under contract, the most recent comp being that, and go from there. Now, I have had sellers where we've already listed homes for as much as 10 to 15,000 below the last home that sold. And even by doing that to try to adjust for this current market shift, they're still sitting on the market for 20, 30 days. The average days on market are going up. And the thing is, when I work with sellers, sometimes it can be difficult, depending on who the seller is, how in tune they are to the market. Some of them are still thinking we're in that extreme seller's market that we have been in for the last year and a half. So they expect all these offers. You have to present the data to them. That's what I try to do with my seller clients. And then on top of that, I have to present data that's coming out on the current last 30 days surface, what's going on, and say, hey, look, you've got a ranch house. We have it listed at 400,000 right now in your city, Suwannee. There are 14 other ranch homes that have sold in Suwannee in the last 30 days. Let's take a look at these, okay? We have an average, sold price versus original list price of 99%. What would that mean if we saw that statistic? That would mean that the homes on average are selling less than what it was originally listed for. And in some cities and markets, we are seeing that. If you pull up ranch homes in Gwinnett County, which I did just this morning, I saw that it was 99%. So now homes are actually selling a little bit below the asking price. When for the longest time, they were selling 2, 3, 4, even 5% in some markets over the asking price on average for all the homes that have sold in that area, city, or zip code or whatever. Well, now it's 99% in some of them. And so I let them know these statistics so the sellers know, like, okay, there's nothing wrong with my house, right? And you're marketing my property, right? Correctly. Because I have had one or two that have asked me that too. And so I tell them, look, hey, I'm marketing it the same way that I do every other property. I'm doing my best, my very best for you. But I understand the natural human instinct is to say, my home's been on the market for 30 to 45 days. What's wrong with it? Or why is my realtor not selling it? And I get it. Natural human instinct within 30 to 45 days, that's the magical period where you start to feel that burn of why hasn't my property or why hasn't my home sold yet. That's when I have to present the data and say, hey, look, again, you have this many homes that have sold, all right, and they've all sold for average sold price versus original list price for this. It took this many days on market on average to sell, and they'll start to see that now it's going up to 20, 30, 40 days in some places. And the data is still trickling in, guys. It's still coming in. The data is still coming in. Like weeks from now, you're going to see that number go up even more. So again, like what we have as data now is from homes that were under contract 30 days ago. And the market is already so different from just 30 days ago, end of July to end of August already. Even that short time period, things have changed quickly. So you got to take into account a lot of things. When I tell people, if you're looking to sell, to make sure to price it in such a way that you can get people to want to buy your home. And how is that? Move-in readiness and pricing. Two contests you are fighting for, or you're participating in this market: a pricing contest and a beauty contest. And either you're first place on one of those two contests or you're last place on both. You want to be first place in both to really win in this game. And what that means is a beauty contest is your home moving ready and renovated. It doesn't have to necessarily be renovated, but has it been decluttered? Is it ready to be lived in, where it's clean? You've taken care of a lot of some of the work of like broken trim, fascia, and soffits outside of the trim. You know, did you have a uniform paint color throughout the whole house, for example? Is it an industry trend like light gray color? Have you got new carpet? Have you gotten rid of the cat odor and the dog smell? Things like that, which are basics that can help you with that beauty contest being 10 out of 10. Well, if you know you got that, and your home's still sitting on the market, then you know that with sellers trying to sell, it's all about pricing at that point. So then you have to price it correctly, which means price reductions. There's a lot of coaches that teach about what's considered to be the right time to do a price reduction and how often and when. Well, what I've been taught by coaches, and some differ in this, and but I believe in through my experience, is that after 2 weeks, for every 10 showings, forget about the 2 weeks. For every 10 showings that you have and you've had no offers, that's when you see a price decrease. It could take 2 weeks. It could take 3 weeks, however long, to get those first 10 showings. Then you go on to the next 10 showings and so forth. So that's one way. But I know a lot of people on here. We got 6 people watching now. Great, great, great. My lender's going to be coming on. She had unfortunately had another meeting. She's showing up late. I'm going to be asking her a lot of questions from the lending side. So you don't want to miss that here. Any minute she's going to pop in through this door. But I know a lot of my people that I've been in touch with through the emails are buyers. So let me touch a little bit more on buyers for us. Okay. Again, when it comes to buying, it's a very good opportunity right now to get things that you were not able to get a year and a half ago with concessions. Now, you still have to look at your mortgage payment. Now, if you look at the increase in prices and take a look here, if you've got a house price that's $350,000, okay, $350,000, and this was from January of 2021, like I mentioned before, we've seen a 32% increase in prices. Well, then you're looking at a new price of that $350,000 home at $462,000 now. And I know I have a lot of people there saying, Tim, I'm just going to wait. I'm just going to stay on the sidelines and wait. And I'm not going to buy a house until the prices come down more. Well, my question that I would challenge those that are watching who are thinking about buying, how much of a price decrease are you looking for? How much percentage-wise of a reduction do you want? Because if you're saying 5%, well, I hate to say it, that doesn't make much of a dent in your mortgage payment. So if you look at 5% from 462, 462 to 438, I mean, that's not bad. That's about $23,000 less. But again, if you factor in the interest rate now, of 5.5%, that adds up pretty fast. And when you talk about buying a home, your mortgage consists of 4 aspects: PITI, principal, interest related to the loan, and taxes and insurance related to the house. And those 2 can be variable, while the first 2 are fixed. So, in other words, you're looking at interest rate that's going to be fixed with a principal that's fixed, unless if you prepay your mortgage every month with a little additional principal, then you can pretty much say that you're going to have the same payment all the time with principal and interest for 30 years. So again, look at, are you comfortable with that mortgage payment? Do you have a down payment that works where you still have money left over for any kind of potential renovation or emergency repair, or just for your family in general to provide for your family and your life? Then you know how much to budget for a down payment versus the amount you need for your family. And then also to look at shopping around for the right lenders that give you the best rates. Find out the right insurance agents that can give you the best insurance coverage, but for the lowest price. And with taxes, you can't really say much to that. That's not in our control. I will say that as the home values go up, property taxes also go up. The good news is that our state is not the highest in property taxes. If you look at Texas right now, I've got clients that are moving from Texas to here. In Texas, and especially like Houston, Dallas is a very comparable city to Atlanta. People are telling me, well, Tim, I like Texas better for whatever reason. I try to challenge them and say, well, keep in mind the property taxes, and the bill comes out, at least here in Gwinnett County, around September. So these bills for their taxes are going to start coming out, trickling in the next few months in Texas as well. They're going to be shocked to see their property taxes increased tenfold, massively, because their property tax value is higher. So that's one good thing that we've got going on here in Georgia, in Metro Atlanta. So, man, we got 8 people here. I wish I could see who is it that's looking. Would love to see y'all comment in the comment section. Please say hi, hello, thanks for the content. Hi, Tim. Please, or if you have a question, you can ask me now. Okay, please do. Speaking of which, one thing I do want to hit on as far as questions that I've had buyers ask me is, Tim, if I have a lease, should I renew it, or should I do month to month, or how should I handle that lease if I'm looking to buy? So to answer that question, you need to talk with your sales office, okay, the leasing office, and check with your lease agreement as to what the terms say. Some of them, hello there, Gloria. Some of them say that you have 60 days to give a notice or 30 days to give a notice. Some allow you to break a lease, but for a penalty. That part you need to check. First, if you're willing to break the lease to buy your dream home, then make up in your mind that you're going to be willing to do that. Then you want to see, how much is that penalty? I know some places say it'll be 1 extra month's rent. So maybe $2,000 more you have to pay. Maybe that's doable. That's not too bad. Hey, Juan, good to hear from you. I know we talked earlier. And then also, if it's just 1 month, that's not bad. But if, for example, they say you need to pay off the rest of your lease and you've got 4 months left on your lease, well, breaking your lease is going to cost you $8,000. You have to ask yourself, are you willing to pay that $8,000 or not? Okay. Otherwise, what I suggest to clients, if they are in a lease and the lease agreement allows for it, I recommend to tell buyers, try to do month to month, because with month to month, you will be paying more than your regular monthly lease, but not that much more, from my understanding. Again, depends on the apartment complex, or whatever you have agreement set up with your landlord with, if you're in a single family home or a townhome. And just make sure you find out, is this something you want to pay or not, and know the penalty involved. And then after that, then you could push that whole obstacle along out of the way, and you're mentally, now you know that you want to buy a house. It all depends on budgeting for that with your down payment. Now, you might ask, Tim, what kind of loans are being accepted right now? And this is where my lender would be talking to me. Um, so she's about 14 minutes out. Oh goodness. So basically, what I would say to that is, um, she's going to be here in 14 minutes. So hopefully you guys can wait that long, because I really want to get her opinion from the lender side, because it's really important when it comes to a home loan. It's really important. But one of the questions I was going to ask you, but I think I have the capacity to answer, is this: what kind of loan are you seeing accepted these days, and what kind of loan should I be getting to buy a house? It has always been tried and true, for the most part, that a conventional loan is the way to go. What other types of loans are there? FHA, VA, and USDA. USDA is for rural areas typically, which I don't really work that area, so you won't see USDA that often. VA is for veterans, people that were formerly in the military or current military. And FHA is a loan program that you could do minimum 3.5% down, has more restrictions than conventional loan, but you could get a competitively better interest rate, a little bit lower, but your PMI stays for the length of your loan. PMI is private mortgage insurance. It's an extra 1.75% added to your loan that stays with your property no matter what. With a conventional loan, that PMI comes off your loan permanently after 20% down. So if you did 5% down, for example, bought a house, over the course of that time, you're paying off your mortgage every month, you're lowering the debt. So the debt to value ratio is going down. So when it goes to 80%, you pay 20% off, the PMI comes off. That's the beauty of a conventional loan. Also, less restrictions when it comes to lender restrictions. Some people, contrary to popular belief, think that with a loan, it matters if repairs get done or not. Not necessarily do you need to have all the repairs done. An inspector is going to inspect the house, and they're going to inspect the things that they see are wrong related to safety hazards, code violations, and anything else that they see, even if it's marginal, not defective, even marginal things like just cosmetics, they're going to point out everything. Now, with a lender, they may require repairs that coincide with what the inspector says, but sometimes it may not. I'm going to give you a good example. Again, this only happens with non-conventional loans, so particularly FHA and VA. FHA, you're going to see with one of my clients, I had through their lender required repair item on their list was, you need to have a handrail installed going from the first floor to the second floor along the staircase. Because there's no handrail, it poses as a safety hazard. And all we did, literally, we drove to Home Depot, bought a piece of wood, sawed it off to get the right length, got permission from the seller to enter into her house, installed it ourselves, took a picture of it, sent it to the lender. Lender sent it to the processor, and they say, good, you've been approved for the loan. Pretty simple, right? But you have to be aware that you might have those lender required repairs. Now, was that in the inspection report by the inspector? Yes. But did the seller do it at that time? No. We ended up getting a credit towards closing costs instead of the repairs, and my buyer was fine with that. And the seller, of course, was willing to give that to agree with us in the negotiation process. However, if a lender requires it, if you want to buy that house, you need to get that loan qualified. You're going to have to do whatever the lender tells you. The good news is it's not often. That was only one time in 6 years in the business have I seen that. So, and the reason why I wanted to point that out and why that's good news is because more and more I'm starting to see FHA loans and VA loans pop up in the market. And those people that are putting offers on houses that have FHA and VA loans are getting accepted. So if you're a buyer and you have an FHA loan or a VA loan, that's good news for you, because now you don't have to have 20, 30% down conventional loan with 800 credit score. It's okay to have a little bit lower credit score and a little bit less down payment money. As long as you find the right house, you can get it. Now, are you still going to be up against multiple offers? There are, believe it or not, some homes and neighborhoods that still have that in Metro Atlanta, especially here in Gwinnett County, but not all. Majority of them are not multiple offers anymore. I have a listing again in Duluth, most affordable price point, $280 for a condo, 3-bedroom. It's been on the market for a couple weeks. Just 3 months ago, there's one that sold for the price that we offered within a week. So that's just the nature of what we're going through. So if you have an FHA loan, or you think of, if I don't get a conventional loan, I can't buy a house. No, if you get qualified, but it's just an FHA loan, or if you're in the military, you have a VA loan, utilize that. And if you're VA, you're military, utilize that benefit. No PMI if you're a VA loan, 100% finance. You don't have to have any down payment if you're okay with the mortgage being a little bit higher. So that's good for you. So anyway, I think that if you want to wait, you can do that. I get it. Maybe prices will come down a little bit more, but just think about how much more. Is it 5%, 10%? If so, that can help with the mortgage payment over time, but not as much as you think if we've already seen a 32% increase in the last year and a half. Now, if we're talking about a semi crash, even though I want to say that we're going to have a correction, if we end up having a semi crash of say 40 or 50%, well, then you may want to wait. And then that begs the question, well, how long do I wait? How long do I know I need to wait? Take it one day at a time. Subscribe to my YouTube channel, follow my monthly newsletter, read the Georgia housing market reports, discern and make your own assertion of the market based on the information that you research and read. Okay. I'm going to have my lender in here real quick, and I'm just going to do a 5-minute break. Okay. I see 5 people in here. Please don't leave. Okay. Love to keep you in here because we'll be back in about 5 minutes when she gets here. I'm going to help with the lender coming in here to talk to us from a lender perspective. Those that are watching right now, this is your opportunity. If you have any questions, please go ahead and write your questions in the chat, because when my lender gets here, I want to make sure that both me and her will be here to help answer your questions. So go ahead, start thinking about some questions. I'll give you 5 minutes to go ahead and ask them in the chat. In the meantime, 5 minutes, I'll be back. It's only one person. Oh, so sad. Oh, so sad. All right. Well, here you go. My lender's going to be here in about 5 minutes. So hopefully we can get this party started. She's running a little bit late. And next time we do this live stream, I'll make sure to make this a little bit smoother. This is all kind of work in progress with the new one. But Brandon, if you're still with us, can I ask where in Southwest Atlanta did you end up buying? And then what is it, Myungtub? Gloria from Buford. I know we met before, I believe, right? Remind me where we met and when it was. Juan, good to see you. I'm glad you're still here. Juan, I heard that you took your home off the market, and you're going to come back on the market, I guess, in October. I take it the market has slowed down there a little bit up north, I imagine. I guess, nationally you just see it everywhere. I mean, it's whole market slowing down some, so I can get it. So I'm just going to read some other statistics here so that you guys can get an idea. So one of the things that I wanted to highlight as far as, basically what you're looking at with the market being a buyer's market or seller's market. A seller's market typically is known to be few months supply. Well, balanced market's considered 6 months. When you go above 6 months, then you start looking at a buyer's market. Well, we're sitting here. If the month's supply in July was 2.6 months, now you see, and that is actually July of 2021. You can see that this past July 2022 is 3.3 months. What does that say? Homes are sitting on the market longer. We have more months supply. If no new homes came on the market and all the current homes that are on the market get sold, it would take 3.3 months to see them get sold. So as this number goes up, if I'm anticipating they'll go up, then that means that we're going to see a more balanced market. And the last time we saw that was back in 2010 to 2012, after the Great Recession in 2008. So we're seeing things start to trickle upwards to a buyer's market trend. We're not quite there yet, but it's getting there. So again, it all time will tell, as the buyers that are on the sidelines will come back and buy when they believe the market has bottomed out. Whereas some people, they can buy now still because financially they're ready. They see the house that they want, and in their life situation, they need to buy. And I think that is one of the biggest determining factors that I could tell people, is that you've got buyers who want to buy and you got buyers that need to buy. Give you an example of wanting to buy. You have a house already. It's a 3-bedroom house and it's you and your wife. You don't have any kids, but if you had one, you still have 2 other bedrooms and the house is big enough to have the kid. But you feel that you just want a bigger house because you got money, you want to upgrade, and you see a nice, pretty house down the street. It's got a swimming pool and it's an HOA neighborhood, and it just looks beautiful. Everything about it, the curb appeal, the brick color, the inside, the renovations of the kitchen. And so you end up buying just because you see a house that you like. That is what you consider as a buyer that wants to buy. If you're a buyer that needs to buy, let's say you're retiring and soon your income is not going to be able to get you qualified for a certain loan, because once you retire, you only have that retirement money, which is a lot less that you earn per month. You want to qualify for a higher loan so you can be able to buy a home. And then you don't have to worry about the mortgage being higher or lower, whatever it is. You got savings to be able to pay for it each and every month. Well, then you kind of have to need to buy in that case. I had a client way back 6 years ago when I first started the business. And I'm actually using her as an example of saying that she was retiring and she needed to buy, and she only had a few months to be able to look for a home. And so I helped her and she bought a home. She's very happy. That's her forever home. So you got other people too that are relocating because of a job they need to buy. You got other people that, unfortunately, they're going through divorces. They need to sell. And so there's all kinds of different reasons for why people need to buy and sell. So if you look at it from that perspective, that's kind of the market we're in right now, those that need to buy. And I see a lot of first-time home buyers that are trying to buy. They're not necessarily the need to buy category, but they are trying to become homeowners as a part of investing into their future. And so those are the ones that I'm seeing that are still going for homes, while others are still holding back because of the interest rates or whatnot. So that's one thing to keep in mind. Now, another thing to keep in mind is, if you buy now, there's not really a detrimental impact. Yes, I know the home prices are higher, but not detrimental in the sense that you're going to be paying off the loan every month. And as time goes on, you're going to build equity in that house because you're paying off the principal. As you're paying off the principal and you're building equity, by the time, let's say you waited 2 years from now to buy so that prices can come down, throughout those 2 years, you will have already paid off a lot of the principal and built equity, and you can write off mortgage interest if you do itemized deductions on your taxes. And so there's a lot of benefits through home ownership, even if you're to buy now. The other thing to think about is that I don't believe that this interest rate of around 5.5% is going to continue forever. And so, having said that, throughout a 30-year fixed loan term, which most people get 30-year term loans, at some point you're going to be able to refinance. And so you might take a little bit of a hit, experience a little bit of the pain now as a buyer, but later you're going to be able to refinance, see your mortgage come down, and be able to pay it off much quicker. So that's something to look forward to. But a lot of times, and I know buying a house is a very emotional thing. It's an emotional investment with a lot of sentiment, a lot of feelings, a lot of roller coasters up and down. But that's the short term. If you see the long-term approach, and you take a step back, look at the big picture, you'll understand that, hey, owning a home is still a great investment in America. And owning a home now, despite the prices and the interest rate, if you're going to be in the home for 8 years or more, it's still worth it. If you look at the National Association of Realtors, back in the 2000s, the average number of years that a homeowner lived in their home was 6 years. Since then, that number has increased quite a bit. Now, in the year 2022, it's more around 10 years. So that means that homeowners are living in their home longer than they used to. So what does that mean? Two things. One, if you see yourself living that long in the home, then you know you're going to be able to refinance at some point. Okay. Number two, if more homeowners are living in their homes longer and new construction, which is coming down, the number of new construction builds is at an all-time low. Well, not an all-time low, I would say. Definitely, like COVID was the worst time, but it's heading down. It's a downward trend right now. Then you're going to see low inventory, which means if you look at the population growing, more millennials are becoming those prime buying years to buy, then they're going to end up buying at a price that's going to be higher. Again, we're seeing a market shift, so that's not the case, but they will go up later in the future. So you got to take into account that. So with lower new construction, lower inventory overall, if you're a buyer now, it's beneficial to you in the future. And here we are with the lender. Come on over. Grab a seat. All glorious two people.
Hello.
We had as many as 6 people that were watching this, and there's no feature on here where I could see if they are actually like who it is that's looking, unless if they post a comment in the chat, then I see their name. So we had a couple people. Brandon looks like he already bought a house and he just wanted to join in. Gloria from Buford, and Juan, who's I think up in Ohio. Is that right, Juan? I think he's one of the only ones that's he's still watching.
Okay.
He had his home on the market, got caught up in the market shift there, like here. And so he took it off the market, try to relist, and then still look to buy a home here in Georgia. So Juan, if you need a good lender, I know you said you have your son that's in the lending business, but Nikki Power is my lender here who can help. I want to move this down a little bit. Okay. So
hi everyone. Like he said, I'm Nikki Power with Guaranty Mortgage. Nice to see all of you. Yeah, he said Columbus, Indiana.
That's right. Columbus, Indiana. I knew it was Columbus and got confused for Columbus, Ohio. That's what it was.
Columbus, all the same.
Yeah. So I've been talking about real estate for the last 55 minutes. And so there's a couple questions I wanted to ask you.
Yes, of course.
I know you're in lending business. Kind of just share like how long you've been in the business, why did you choose it, who do you work for now, and which area do you really service?
Yeah, so I work with Guaranty Mortgage, of course. I've been in the finance industry for almost 15 years. And, kind of fell in love with mortgages. So I started in auto financing, did a little bit there, some other financing as well, but landed in mortgages, and I love it. So that's what I stuck to.
Nice. Very nice. So Nikki, she's been my go-to lender for 3 years, been very helpful in getting a lot of my clients loans, closing on time, great communication, and just overall been fantastic in the buying process for my buyers. So having said that, like kind of want to get your perspective on like just like the buyers that you're working with now, and just say like in the last 3 months, what's been kind of like the general consensus of how they feel? Like, are you seeing them still actively looking for a home, or are you seeing them actually kind of pull back and wait because they think the market's going down more, or kind of a little bit of both? Like what kind of like real life scenario are you seeing with the conversations you're having with clients these days?
Yeah. Great question. Get asked this a lot. So, a little bit of both, but mostly I think a lot of my clients had kind of given up in the beginning of the year with dealing with the COVID market from 2020, 2021, and then, carrying over to this year. So, some of them, I think, decided to take a break and now are reentering, which is great. people still bought, in the beginning of this year, but the market's just not for everyone. Everyone has a very, specific situation and what they want. And so a lot of my people that were very active in the beginning of this year or even last year, 2020, are now starting to come back to the market again. They're seeing that they feel a little safer because they can have, contingencies again. And, they feel like they don't have to be up against 40 other offers to get that house. So I think I am seeing, a good amount of people, like I said, start joining the market again now that it's more reasonable, leveled out some, and now that they can have those protections that are important to them.
That's great. That's great. Yeah, I was just telling them earlier about how I had my first buyer get a pretty big closing cost credit for the first time in like a year and a half.
Yeah.
And I've gotten credits in the past year and a half, but not as big as his. Is like 10,000 credit. And then it was another one where it was 15,000, and it was in the initial offer, like not in the inspection itself. So it's great to see. Good for buyers.
Yeah.
Another question you probably get a lot. You're probably like, "Oh, I've been asked so many times."
Nope.
But like, where do you see interest rates going? And what do you think of the current interest rate? Is that good or bad? Or, I remember you told me at one point like 4% is kind of like the standard that's considered a healthy market. What do you think as far as like the current rate is and where you see it going?
Yeah. I mean, rates have been all over the place this year, just like the last couple of years, and predictions have been wrong quite often, just like everyone thought in 2021 rates would go up and they didn't. So then all of it happened quickly in 2022, and then everyone's really shocked, but not realizing that this was already in the works and it was already expected. Just the fact that it's happening so fast is definitely a shock to people. But I mean, the truth of the matter is 5-6% interest rate is not a bad rate. Anyone who asks their parents or grandparents or anyone that bought, in the 90s, 80s, whatever, single digit is good, right? Will we see, it go down below 5, 4, maybe 3? Yeah, I think we will. Maybe not for, a couple years, but I mean, most people, what they're doing is, they're just accepting and understanding the fact that they'll likely refinance in a couple years and get a much lower interest rate. So like I like to say is you date your rate, but you buy the house. Get in your house now. Don't let interest rates dictate what your plans are with your life, right? Because the rate's just temporary. So, a lot of people are very stressed out about the rate. They hear 5 and 6 and they're like, nope, not going to do it. But, if you wait, what does that look like too? At the same time?
It's funny you mentioned that. I was also mentioning earlier to them that like, throughout a 30-year term, that rate, yes, it's fixed, but at some point, perhaps you can refinance. And also while you're living in the home, you're building equity by paying off the principal every month.
Yep.
So yeah, there's those two things that's going for buying a home now and being a homeowner now. How about in relation to like home prices? Because I know like the home prices are higher. What do what would you share with a buyer who's like, well, the prices are so much higher than they were a few years ago, and what does that entail from a lender perspective?
Yeah, I mean, just like you probably get this question a lot too. I don't think that prices are going to go down. And I think that our market specifically, I can't speak for the entire US, but I think our market specifically, North Atlanta surrounding area, Georgia is, still booming. And, I think that anyone who is buying a home right now will still likely have equity. I know people are scared. They think, well, if I buy a home at the price it is now, they think it's not worth it. But it's not necessarily, what's worth it in your mind. A home is worth what someone's willing to pay for it. So anyway, I mean, basically, I think anyone who is buying a house right now, they're still going to be in a position with equity in the next year, 2 years, or however long, because we're still in a market where everyone wants to move to Georgia. Everyone wants to live in Atlanta because it is a fabulous place to live. So understandably, but yeah, I mean, I don't think home prices are going to go down. I think they're leveling out. What's happening in the market right now is exactly what the purpose of all of this was. This was the plan: increasing interest rates to slow down the market, to stop heavy price increases and, prevent from us continuing to go up as far as we were going up like in 2020. So, I mean, some people are scared, but they shouldn't be, because this is the way that it was intended. This is why these things were put into place, to slow things down and get us to where we are right now.
Good point. Good point. And since you started talking, nine people now are watching.
Hi, nine other people.
If you guys are just joining us, please comment. Love to say hi to you, and leave a question if you have a question too. We really would love to answer your questions.
So. It can be very general, or it can be specific. Either way.
Yeah. So, going back to home prices, I have seen in some places in like Gwinnett County where I work, in Forsyth, Fulton, where the prices have come down some. Maybe it's a way of perceiving it, though. In one sense, it's like, well, yeah, home prices are going up, but it's because they're anticipating a higher price based off of the last home that sold, without adjusting for the current market for what's considered like the actual price of the home. If that makes sense. And the homes that are still priced right and they're moving ready, they're still getting asking price or above.
Yeah.
I think it's where you're starting to see like homes that, like, our broker the other day said, like, you have two contests that you're facing as a seller, a beauty contest and a pricing contest. So your home's either moving ready and beautiful. If that's not an issue, then it's the pricing.
Yeah.
If the pricing seems good or it still needs adjusting, maybe there's also another factor, and that's you need to renovate it or get it all ready and spruced up.
Very true.
But, I think at the end of the day, you hit on one point that I didn't really think about much that I wasn't sharing earlier, but it's worth highlighting, is like the Atlanta market in general, specifically. I think we could look at the whole nation and say, well, there's a lot of places where their prices may be going down, but you got a lot of people that are migrating here. They're calling Atlanta their home, helping people in Columbus, Indiana, like you won, and people in Brooklyn, New York, Wisconsin, New Jersey. Helped a lady in New Jersey. She sold her home in a historical district of New Jersey, took the funds and bought $500,000 home, her forever home here, with like multi-generational, with her her daughter-in-law on the other floor of the house, and then bought 3 other properties, investment properties.
Love it.
So sold 1, bought 4. Affordability is great here. And then you look at like West Coast. I've had people from LA, San Francisco, Sacramento that have moved here. One I'm talking to right now from in Arizona. So it's just, there's a lot of that factor to consider too, as far as the demand that continues to keep the prices the way they are and moving in an upward trajectory. So having said that, like, another question I'd ask you is like just from like a strictly loan perspective, since you're a lender, like, are there any good programs for first-time home buyers, people that are looking to buy here in Atlanta? Like, what could you say is like something they could look forward to when it comes to qualifying for a loan?
Yeah, there's you get automatic discounts for being a first-time home buyer on things like your interest rate, your PMI, which is mortgage insurance, and some other things. But you also get the benefit of lower down payments, some other flexibilities. So you definitely do get benefits as a first-time home buyer. The best programs still are the ones a lot of times people associate first-time home buyer with no money down. But it's important to know that no matter what, it's usually always better to go with a standard loan program that does require down payment. So basically, if you have the funds, it's typically the best terms, the best general process altogether for first-time home buyers, to do it that way, to put a down payment. And that's why they allow 3% for conventional. And that's why that's not allowed necessarily for people who aren't first-time home buyers. So great options for any first-time home buyers and not first-time home buyers as well. It's also important to note that not a lot of people know this. You're considered a first-time home buyer after it's been 3 years since you bought a home. So some people think, well, I owned and bought a home 10 years ago, so I'm not a first-time home buyer. Well, you may not be in your eyes, but in the eyes of a mortgage and qualifications and mortgage programs, you are. If you haven't had your name on a deed or title of a property in 3 years, you are eligible for first-time home buyer again.
That's awesome.
Yeah.
I don't think I'd even knew that.
A lot of people don't. So when you brought that up, I thought, let me just go ahead and tell everybody that, make sure
That's
everyone's
good.
aware of that, because they may be thinking, well, that sucks. I can't get that. But maybe you can. If you haven't owned your home for 3 years, then maybe you can.
So the perks of that program are still available to you, even if you
Yes.
bought, depending on the timeline of when you bought that. That's fantastic. So, man, that's good. What about like I'm sure you run into like misconceptions
Mhm.
on the lending side. What buyers
Every
think.
day, every
I know
single
one
day.
that I pointed out earlier was that like you have to do 20% down to
Mhm.
qualify for a loan.
Mhm.
Another one is that like PMI automatically comes off no matter what, but actually no, that's only certain loans, right? Like conventional it does after 20% down, but not FHA.
Mhm.
What other like just like common misconceptions have you seen?
The down payment one is a big one. I think a lot of people now know that they don't have to do the 20% down, but for years that was always the case. Um, I think generally speaking, what I see a lot is people that have gotten advice from friends or family, which it's in our nature, right? We ask people that we know and love and trust
Mm,
for advice. And they may have advice from their own experience, but it's so important to know that every situation is different. Every single person's situation
mm,
is different. Things change constantly in mortgages. So even if you have a friend that bought a home 2 months ago
mm,
and they were self-employed and maybe they had a similar situation as you, it could still be completely different.
mm,
So I have a lot of people come to me that say, well, my friend told me I had to have this, so I can't qualify for a mortgage. And that's why it's so important to speak with someone that is
yeah.
a licensed mortgage professional to ask those questions. And there's no obligation. As far as me, I love answering questions. So
Mm.
anytime anyone has a question, I'm not going to push you to do anything or apply or anything. I'll just answer your
Same
questions.
here. That's why I need to see some questions in the chat room. You guys ask them
Yeah, Juan.
questions.
Where are you, Juan?
I know Juan will be buying at some point. It's a
Good.
matter of time. But
Very good. We love helping people relocate. I just love helping people relocate
Mhm.
from another place and filling them all in about everything local here. And
yeah,
that's always fun.
yeah, I was telling the best Korean barbecue places. I
Of
said,
course you do.
it's like
There's
the
some
first,
good ones.
the
There are
first
some
thing I
good
tell
ones.
people.
Yep.
But yeah, so
But
yeah.
yeah, I would say that's about the most. I always hear my friend or my neighbor or somebody told me this.
Mm,
So they either think it's true, so they think maybe they can get it,
yeah.
and then are disappointed to find out maybe they can't, or they think that they can't qualify for a specific reason, and that might not be the case.
Mm, mm,
That goes with lenders too. If you've talked to a lender in maybe Washington, to buy a house in Washington, those laws and rules and guidelines are very different than rules and guidelines here in Georgia or
mm,
Florida, licensed in Florida too. So, a lender may tell you, well, you can't do this or you need this, this, and this, and you think that's everywhere, but it may not be the case. So
mm, mm.
it's always good if you have any questions at all to ask your realtor. This guy's a great one. Or, a loan officer, a professional that can actually answer your question correctly and not give you false information or false hope or any of those things.
Mm.
And I am including Google. Google is not 100% accurate. Google is not licensed in mortgages.
It's a good point. Good point. Man, yeah, it's good to have somebody that's on the ground running, like in real life, firsthand, experiencing everything. A lot of intricacies in our market, in our profession that you see change over time. That if you're not in it every day, yeah, you might miss an important detail that a buyer or seller
Absolutely.
needs to know about.
Mhm.
So one misconception that came to my mind as you're talking was, and I remember this ran into one of our clients not too long ago, is that when you're looking to qualify for a loan, you can like have a co-borrower or just have a person on the loan with you. They say, well, my credit's low, so I'm gonna have my wife come on.
Mhm.
But what's the deal with credit score when it comes to two people? They take the lower of the two anyway, right? Can you share more about that?
Yeah, I mean, the thing is, in this, that's a great question, because one thing I do get a lot is people think that someone can be put on the loan and just use their income. And that's not the case with mortgages. If you're on the loan, we're doing everything the same with the primary too. We're pulling credit. You can't just use income or just use credit. You got to be fully on the loan if you're equal partners on it, whether that's a spouse, a co-borrower, a non-occupying co-borrower, or whatever. But when it comes to credit scores, with mortgages, the three bureaus are pooled. So Equifax, TransUnion, and Experian, all three are pooled in mortgages because we want to see all three credit reports. We use the middle score between that. So if you have two people on the loan, we would take the middle score of each of you and use the lowest of that. Now, if someone does have a lower credit score, having another borrower on the loan can strengthen it. But as far as talking credit score specifically, that interest rate is always going to be calculated off of that lower score, as will the PMI as well, the lower between the two of you. So, having another person come on, if you have low credit, can definitely help. Definitely. But, there are still things that you're not going to get a better interest rate because you have the other person on there, because it's still likely going to go off your lower score. Things of that nature.
Makes sense. Wow. It's good information. Is there any last words that you could share from a lender perspective to let buyers know about, or even sellers, or just about the Atlanta market that you're noticing, in the shift, or just whatever, anything?
Yeah. I mean, you mentioned on prices maybe lowering. I think what a big misconception is that people are seeing price reductions. And so they're thinking that means prices are going down. And it's important to know that that's not necessarily the case. That they could have listed way overpriced, trying to get the top dollar that they could. They thought, well, like in 2021 last year, they listed. A lot of people listed over what they thought they could get because they thought they could get it. And a lot of them did. But,
an anomaly in the market.
Exactly. So some people think that's the same. I'll just list it for way more than I actually want to sell it for. And that's why we're seeing price reductions, because things have leveled out. So there's not as much competition. So I think that's one thing I get questions a lot. Well, if prices aren't decreasing, why am I seeing price reductions? And it could be both. I'm not saying it doesn't mean that prices are decreasing. Right. It's just important to know that a price reduction doesn't mean that prices everywhere are decreasing, because you as a realtor know that every house is so different. You could have a house where there's no offers and it sat on the market for 3 weeks, which is not unusual, but we haven't seen that in a couple years. So going back to pre-COVID times, or you could see a house that is exactly like it was 2020. You got 10 offers right out the gate. You're having to compete. You're having to waive contingencies. You're having to do quick closings. That's still happening. So it just depends on the house. I like what you said about the price, the beauty contest.
Beauty contest and pricing contest. Yes. Those are the only two contests that any seller's participating in any market, anytime in history of the real estate market. You mentioned too some pre-COVID pricing. I want to hit on this because this is probably the biggest important thing, biggest takeaway I want to tell people that are viewing this right now, is that like people oftentimes are saying, oh, we're in a crash, or it's going to crash. It's heading that way. No, we're having a correction to go back to what's called a normal market. It is a normal market, not a crash. See, back in 2019, 2018, 2017, as far back as when I first started, you always see negotiation based on price with your offer, then with closing costs, any kind of repair items that perhaps the seller is willing to do in negotiating with if you're representing the buyer or whatnot. And that's always been the case. You had an appraisal contingency, a financing contingency. The price that it's being asked for, listed on the market, may not always be the price that it sells for. For a long time, the average, what you would say sold price versus original list price, was like 99, 98, 97%, and so like for people to see like, oh, it was on average over asking price by 3% in this particular city or zip code. First of all, that's an anomaly in and of itself. It's not sustainable. And so to go from like 103% to 99%, that's just a correction to a normal market, not a crash. So I hope people see that. If the prices are coming down, they're supposed to come down. They need to come down a little bit with the interest rate going up as high as they are, but by no means is there a crash. So if you're waiting to see that crash happen and unfold so that you can get in, like Nikki is saying, she's got buyers that were holding off earlier this year. They're coming back in the market. I think they're doing a good thing to do that.
I agree.
I think now there's some proof in seeing just the transactions that have transpired in the last 30 to 60 days that it's favoring the buyers a little bit more, and you're in a good position to buy. Even as a seller, you can still sell and cash out a lot of equity because of the increase of 24% from January to December of last year, and even the initial first 3 months of this year. You may not get the top amount. Kind of see it like as a stock. You try to sell a stock when it's high, buy a stock when it's low. Are you always going to time it at its lowest point when you buy and time it perfectly at the highest point when you sell? No. It's kind of like that with housing, but typically people don't think housing to be that erratic, so high or low. It just happens to be that case the last 2 years. But if you're looking to cash out equity, you still can. And just to know that we're in a normal market, whereas we were in a burning hot, scorching seller's market. So if you see your home on the market for 30 to 45 days, don't get scared. Okay. Look at the stats. If you're with a good realtor, he's going to provide you, he or she's going to provide you with those stats, real-time stats in your market, in your neighborhood, of what's sold, what's under contract, how long the days on market are, and so forth.
Yeah.
So
glad you talked about that, because I think that a lot of people are questioning that all the time. I get questions about it all the time. You get questions about it all the time. And, I think anyone who is waiting because they fear a crash you're going to regret it. I mean, there's no way around it. People that were in 2020 that decided to wait, they all really regretted it in 2021. I still truly believe that no matter what is going on in the market, you got to do what's best for you. If you qualify for a home and that's what you want, do it. You're investing in yourself. And what I always say to people too is, let's say that by some miracle or reason or whatever, the market crashes. Let's say you buy a house today and the market crashes in a month. Does that even really affect you? You're not going to sell your house in a month.
Live there for a while, yeah.
So even if that happened, how is that going to hurt you in any way, shape, or form? Because it always bounces back. Real estate still to this day is the safest investment a human being can have, because it always comes back. It always goes steadily up. So if you're fearful of a crash, just think about it, why you're fearful of that. What is the real reason? Are you afraid to buy a house? Is that what it is? Are you just not ready? Or are you ready? And that's the only reason. Because if it's the only reason, you're just going to be sitting around waiting forever, and you're going to keep regretting it and keep regretting it. So, if you're fearful of a crash or whatever, just remember that. Well, I want to buy a house and I want to live in it for 3 years or 5 years. Well, say you buy it and the month later the market crashes. How is that going to affect you? It won't, because you have your interest rate. If anything, it could cause interest rates to decrease and you could refinance and get a lower rate. So it's just important to know that,
I think, always have something new to say, because you're bringing up such good information.
As are you.
So I was going to end the video, which we will end here soon. So if you have any questions, it's your last chance to ask. One thing I was going to say is that lending standards are a lot stricter now than they were in 2008.
Absolutely.
That's what makes the market so robust, like it has been all these years. But to take it one step further, I was just reading an article this morning about how the economy in China is crashing. And one of the things that you're seeing in the real estate industry in China is that there are buyers that are buying properties as pre-sales. In other words, they haven't even been built yet. And they go to buy it. And in a normal market, if you buy the property, you stop making payments, well, the lender will come back and repossess your property as collateral, foreclosure, aka foreclosure. But these properties haven't been built yet in China. So if the buyer doesn't want to make the payments, he can. And then the bank and lenders want to go repossess, but guess what? They can't, because the property's not been built yet.
Doesn't exist.
It doesn't exist there. All in China, there's so many that hadn't existed yet. Those are the kind of standards we were seeing back in 2008 in America that, unfortunately, for whatever reason, are repeating themselves, or maybe for the first time. I don't know how China's developed over time. It's been a fastly exploding country economically, where they are having those ill practiced, financial standards. And so here you're not going to have that. We think hopefully we learned from that in 2008. There's some other issues politically, economically, social economically that we need to resolve in our country, but like any other country. But Anyway, I hope this was a informative live YouTube video. This is my first. I wanted to do it with Nikki because she's been my lender for so long. Great friend, great business partner. Please subscribe to my YouTube channel if you haven't already. I do my monthly newsletter. So if you were able to watch this because of my monthly newsletter, keep staying in tune to my newsletters. I keep coming out with them, and my YouTube channel goes in conjunction with those newsletters. So hope you guys have a great day, great week. Feel free to reach out to me in any way. I'd love to help you. Call, text, email, however you want to get a hold of me. I'm here for you in the Metro Atlanta market. Nikki can also help if you're on the buying side.
Yes,
you guys
absolutely.
have a great day today. Take care.
Bye.